Did last week's stock market rally catch you by surprise? It was not a surprise to us, as myself and my partner John Person have been telling our clients for the past several weeks not to get aggressively bearish as we approach the Labor Day weekend, but instead look for a good buying opportunity as the market was more likely to move higher than lower. This is diametrically opposed to what you heard on the financial news networks from other advisors and other newsletter writers, who incidentally turned uniformly bearish in the past week or so, the day before the market rallied sharply. For those of you who are not familiar with our publication, the PA Stock Alerts, it is a collaborative effort of myself and John Person, internationally known author and trader who developed the Person's Pivot Points. John is also known for his unique analysis of the commitment of traders data. In this short video, it'll show you how it has helped you keep you on the right side of the market for the past 2 years, and more importantly, what it's telling us about the market right now. Here's John.
I wanted to go through and show you what it looks like on the Commitment of Traders report, looking at the weekly chart on the S&Ps, and just to review what our analysis was calling for. We were looking for between 38 and 50 support zone, and as you can see, we go back in time. Pretty much that was about what we held for the weekly low. So we'll come through here. The low for the week was exactly 1037, and we closed the week at 1063.70. So the market did respect that area, not to get too, as I say, bearish in the hole. In the meantime, I'd like to point out that while we were advising you not to get bearish in the hole, apparently that message did not go out to the rest of the world, because as you can see at the bottom, this is my TradeStation, and only the TradeStation plugins that I use have this feature. Is a Commitment of Traders report histogram, which shows, and I'll give you the color codes here. Blue are the professional speculators, such as professional floor traders, hedge funds. These are the folks who have reportable position limits, and they know what they're doing generally. The red line are the commercials. They're hedgers. They're just people that may run a mutual fund, or it's a company that has a high beta stock that correlates to the S&Ps, and they need to be hedged in the market. They're not looking to profit from the futures. They're looking to lock in a price, or to lock in a deliverable price, or to at least be matched with the index. Next, they take the balance of those positions against the open interests, which is either net long, net short, and whatever the balance is, it's assumed to be the small speculators, and that is represented by the yellow histogram line. What's interesting is that, as you can see, many of you recall back in late April, early May, I said, listen, this whole rally on the way up was driven by the speculators being short the market. Let me go back and show you exactly what I'm talking about. Since this, when yellow is below the zero line, it means people are short. And as you can see, since the low was posted, the small speculators were short the market the whole way up, just about the time where the market peaked out. And notice that the professional traders, they were long the whole way up. Now, this summer's been interesting because, no offense, and you're well aware, it's been quite a pretty wild trading range. And in here, though, we've seen the small specs stay generally on the long side the whole summer. They've been running all the way down into this real sharp negativity. So they've been getting long on rallies. As you can see, the market rallies from one week to the next. They get long on rallies. They get less long, but they're still holding their longs in this whole time frame, which is interesting because as of this week, they went net short. So the blue, as you can see, we really haven't seen a commitment with the professional traders, at least this far along, a net long position, 84,000. We have not seen that level, a heightened longness, until way back over in here when this bottom was formed. So it might tell that finally the speculators have tossed in the towel. They've gotten real short the market. They've gotten bearish the market. And unfortunately, small speculators get married to losing positions. And I just want to bring that to your attention because I know that we were talking about this support area in here. holding, and as it is right now, not only did it hold, but we've got a clue that it may go a little bit higher because small specs are short the market. Meanwhile, let's take a look at the commercials. Commercials really started to cover some short positions as well. I mean, they were really short 3 weeks ago. They're not as short anymore. So the ones really holding the bag short is the small speculators. From a psychological or consensus reading, now we have the wrong group or the right group, depending on how you look at it. If you're bullish, you got the right group being bearish, the small specs. I don't want to be bullish when they're bullish. I want to be bullish when they're bearish and they're selling in the hole, and that looks like what has happened. So I don't think that they get out of their positions immediately. They're not quick to change. It may take several weeks for them to figure out that, oops, I shouldn't be bearish. In the meantime, that may bring us back up to higher levels into the month of middle of early September. So
if you're a stock trader and find that too often you're buying when you should be selling or selling when you should be buying, then you should take a look at the PA Stock Alerts. The PA Stock Alert service features video updates 3 days a week and periodic published reports to show you the rationale behind our trades. It is a collaborative efforts of myself, Tom Aspray, and John Person, both of whom have over 30 years each of experience in the financial markets. If you want to get an idea of our background, Google either one of us and you'll see that we've established a long and successful career in the financial markets and are offering this collaborative effort for the first time this year. So go to PA Stock Alerts and we look forward to having you join us.